Alright everyone, Cowboy Trades here. Welcome back to the channel for another update on Bitcoin. Let's start off this New Year's worth of uploads with a tiny dive into some on-chain metrics, and then a little bit later on today, we will update the TA. So let's start off on what's going on with the Bitcoin addresses. We've discussed these many times, so I won't delve into them too deeply. The retail addresses basically with just more than one Bitcoin. You can see these retail wallets are still accumulating at this moment in time, whereas when we do come over to the addresses with more than 1,000 Bitcoin, the guys which pretty much called the exact top in this market, who sold around about 47,000. Who did they sell to? They sold to retail, who is still buying at this moment in time. However, institutions, smart money, the whales, they've been out of this market since 46,500, and since my last update, we did an update on the whale wallets a little while ago, but since this last update, you can see the lows from addresses with more than 1,000 Bitcoin have diminished from 2,040 all the way down to 2,037. So really not a big drop, really not too much to update, but this just kind of generally shows us, like we talked about in the last video, this was going to start rounding down and breaking further to the downside. So while a lot of retail traders are celebrating by like a $100, $200 pump over in the BTC USD price, whales are starting to sell every single time we have a little bounce to the upside, which of course means when we do quantify these two charts together, when we look at the Bitcoin ratio of retail to institutional addresses, basically all you need to know about this if you're new is that when this blue line goes to the downside, it's a sign that there is more institutional interest in the markets than retail interest. So for example, we can see back in 2020, 2021, this entire bull run was happening because of institutional interest. How do we know this? Well, retail wallets weren't accumulating. You can see what happened. Retail wallets were coming down. What institutions doing? Institutions were going up. So when we look at this ratio, you can see the blue line was going to the downside and it started to peak up once again. The price target we just mentioned, 46,000. We've talked about this many times, but as we can still see, the blue line is rapidly heading to the upside, while whales, yes, they're selling a tiny bit, but all you really need to know is whales aren't buying and retail is still dramatically accumulating. So on this channel, we always like to go against the trend of what retail's done, and we've obviously navigated this bear market beautifully just by following these simple metrics. Now, moving over to the Bitcoin network value to transactions, also known as the NVT ratio. This is something that we haven't looked at before. This is an interesting metric. What this is it takes the Bitcoin price and it divides it by the Bitcoin trading volume. So this chart is very similar to the active addresses. If you've been on the channel for a while, you know that when active addresses spike, it's a sign that there's lots of Bitcoin being moved on the chain, and that's very likely to pull the price action to the downside because, of course, people are selling. This is very similar to this, only it doesn't look at how many active addresses there are, it looks at the trading volume. So, for example, tons of addresses could be activated, but if there's not much liquidity in that, then this ratio won't move to the upside very much. But as you can see over here, as it says, when you have a high NVT ratio, so when the network value to transactions is very overextended, this is a sign that Bitcoin is overvalued. And you can see previous times where the NVT ratio has moved to the upside. So it doesn't always call exact tops. This is more of a macro indicator to give you an idea that another capitulation is coming. So for example, over here, 2014 price was at 373 and this ratio spiked and we continued to break down all the way down to about $200. Over here, what I've noticed is if you're looking at spikes, look at the spikes with the ratio over 24 over on the left side of the y-axis over here, or if you're looking at the number of US dollars. This is of course in correlation to the price action, so don't pay too much attention to the right side of the y-axis, but let's look at spikes of this NVT ratio above 24. Here you can see further capitulation to the downside. Here, what is interesting is this is exactly the situation that I think we're in at this moment in time. The NVT ratio poked up to 31.77, and what did this mark? This marked the exact capitulation for the Bitcoin price to move all the way down to about 3,400, 3,200 or so. So once again, another spike above 24, and this marked the final capitulation. And as we are in a bear market right now, you can see how similar these situations are. So from the top where Bitcoin was at 69,000 this cycle, you can see we've started to break down, and only Like, if you watch the channel, I've been saying, I think we're one brutal final capitulation away from the bottom, and this is why another reason why I think we're in this type of scenario. So we're seeing the NVT ratio take a massive spike to the upside, but price in my opinion is getting ready to snap back down. You can see another overextension over here. The ratio went to 36.57, and then it double topped, and then this was literally just before we had that pandemic crash. So I wouldn't necessarily attribute it to the pandemic crash. This was a black swan event, so I would be discounting this one. But then you can see, when we do zoom in over here, you can see a big spike up to 37.7, and this marked the exact first top when Bitcoin was at 63,100, and then you see a further spike round about 49,000. Once again, like I said, these don't always call the exact top. This pushed up a little bit further to 69,000, but you know, this huge spike in the NVT ratio was saying, hey, the actual value of the Bitcoin network in comparison to the US dollar valuation of transactions in the network is overextended. So this is why, once again, like it says over here, when the NVT ratio takes a massive run to the upside, Bitcoin tends to move in the opposite direction of the price. So NVT is taking a huge run to the upside right now. As of today, we're sitting at 40.37, which we haven't been at since Bitcoin was round about 48,000. So that is a worrying signal. Now, not too much to update in terms of the hash rate. I did make a extensive video on this the other day. This has taken a slight, well, it's taken a fairly decent move back up to the upside, but of course you can see, you know, there's a top here, there's a low, there's a lower high, there's a lower low, there's a lower high, there's a lower low, and in my opinion this is probably going to be another lower low. I'll let you know why I think it's going to be another lower low outside of technicals in just 1 second. But with this, of course, if this is another lower low, and I am correct about this, and price action starts moving to the downside, this is further going to ensure that the Bitcoin hash ribbons indicator is probably going to come back up, retest this pink trend line, and start plummeting back down to the downside. You can see hash ribbons have been capitulating for quite some time since Bitcoin was priced at round about 16,500, or if you want to look at the date, it's been capitulating for the past 1 month and 2 days since December the 1st. So while price hasn't moved too much, hash ribbons indicator capitulating has always pretty much historically been a sign that a major capitulation is right around the corner. You can see the two most major ones that I'm highlighting here, all the way back in the 2018 capitulation, and then this was when the China exodus happened. And why this is important is because obviously when all of the miners in China were told that they have to turn on their computers, the computing power of the network, aka the Bitcoin hash rate, started to break to the downside. Now, like I said, not too much to update in terms of the hash rate since our last video, but why do I think the hash rate is going to start making lower lows, and why is this further bad for the network? Well, let's talk about miners. Recently on this channel, we've been looking at a few metrics talking about the average mining costs and how mining right now is unprofitable unless you're living in a very specific place, maybe Texas, El Salvador, Africa, somewhere where you've got cheap energy or geothermal energy, but that is not the case for the average Bitcoin miner. So this is what we're looking at with the Bitcoin average mining costs. And at this moment in time, you can see the Bitcoin average mining costs, aka the price to mine a single Bitcoin, is 18,594, whereas the price of Bitcoin is at 16,600, basically meaning, you know, if you spend 18,500 to mine 1 Bitcoin, and of course you're only getting 16,600 out of that, then you'll be making 16,600 worth of revenue, but in terms of profit, you're going to be minus 2,000 in terms of profit, which is not good. And you can actually see this is really why miners have been capitulating for quite some time now. You can see this blue line, which it doesn't typically happen. The average mining cost is normally beneath the price of Bitcoin, but recently we're seeing, you know, for the past few months as well, the average cost of mining Bitcoin is actually higher than the price of a single coin, and this is not typically what we see too often. We sometimes see this in final capitulations, like for example over in 2018. When the average cost of mining Bitcoin was just so elevated, miners just became insolvent. They started turning off their rigs, a lot of confidence in the network was lost, and of course price went down to that final capitulation. And this is another reason why on top of everything that we've been looking at quite recently, including the TA, all the on-chain metrics, looking at what smart money is doing, looking at what's going on in the greater economy. If you follow the channel, you of course know that we don't just look at TA, we don't just look at on-chain, we look at news, we look at economic data, we look at the stock market, we look at the bond market, we look at the dollars, we look at, you know, government rates, we look at inflation, we look at tons of different things, liquidity. This is just kind of one video where we quickly just talk about on-chain metrics. But anyway, my friends, that's all I've got for this on-chain metrics update. If you like the video, make sure to let me know by leaving a like and a comment down below. Share the videos with your friends. It's been your boy Cowboy Trades. I'm out. Peace.